So, yeah. So in this session, we will be discussing about the second chapter, and we will not be discussing the entire chapter of basic income tax computation, but we will only be discussing until non-savings income and savings income, because this is a chapter that forms foundation for your entire income tax concepts. All right. So in this, what we will be discussing is we will be understanding about what is personal allowance. Okay. After personal allowance, we'll be understanding what is non-savings income, what is savings income, what are the tax rates applicable, what are the tax rates that are applicable for these two types of income, and post that we will also solve a few questions wherein we will compute the income tax liabilities. Okay, these are all the things that we'll be covering in in this video. All right. So Mohit, whenever you have any questions at any point of time, always feel free to ask me. If you feel that I'm going fast or slow, you can always let me know. All right.
Yes, sir.
Okay. So first, in yesterday's session, we have discussed about what is taxation and what is the purpose of taxation. And post that, we have also discussed about what is income tax, what are the different types of taxes that are applicable in the UK. In this video, what we'll be doing is we'll start off with taxation, the basic part of income taxation. That is the first type of tax that is applicable. And in that, we will be doing the computations. What are the basic rules that are applicable? What are the tax rates that are applicable and all that. All right. So first and foremost thing to remember, in the UK, any person who is earning any kind of income, that income will be considered from 6th April to 5th April, which is known as tax year. Tax year. Is this the zoom all right, or do you want me to zoom in a bit? Is it clearly visible?
All right, sir. All right.
Okay. So always remember, the tax year in the UK is considered to be 6th April to 5th April. Okay. So in our situation, what would it be? It would be from 6th April 2025 to 5th April 2026. Correct?
Yes, sir.
Because we're studying the FA 2025. Now, what is the purpose of this tax year? Any question, any type of individual income that they earn, it will not be based on the the normal year, that is 1st Jan to 31st December, but it will always be based on income from 6th April to 5th 6th April 2025 to 5th April 2026. All right. Which means, let's say an employee was there whose annual income for the year 2025 was 150,000, and for the annual income for the year 2026 was 175,000. What do you think we should take? Should we take 150,000 or 175,000?
So the tax year is falling in between these two figures.
Exactly right. Because the tax year is falling in between both the years, what you should do, you should prorate it. Because the year, whenever they say for the year or financial year 2025, it's always from 1st Jan to 31st December, which means here we should be taking the income only from 1st April to 31st December, correct? Because you can ignore the 5 days gap that exists. Usually, whenever there are questions like this, you should always take is equal to 150,000 equal to 150,000 into 9 by 12 and is equal to 175,000 into 3 by 12. Got it? Because this will be from 1st of April all the way until 31st December. And that will come to your 9 months, correct? Yes, no, maybe?
Yes, sir. Yes, sir.
And 2026, what is happening? This person is from, it is from starting from 1st Jan to 31st December. But we will be taking only until 31st of March. We can ignore the 6 days in the starting and 5 days in the ending. All right. You do not
Okay,
have
sir.
to calculate it for days. You can directly calculate it for months.
Okay, sir.
So this, the sum of both of these will be the taxable income of the individual. All right. Clear?
Yes, sir.
And that is a very important point to remember. It is not only for employment income. Whenever they say that it has been provided for the year or partially in the year, you should always understand that it should be taken for the tax year and not the financial year. Accounts and tax are two different things. You should never bring forward the knowledge from accounts in your taxation because that might be confusing. All right, clear on that? Any doubts so far?
No, sir.
Great. Now, this is the tax. This is we have understood about tax year. Now, let's try to understand what is meant by personal allowance. Personal allowance is nothing but any the tax-free income. Personal allowance is nothing but it is tax-free income that an individual can earn in the tax year. Okay, during the tax year, let's assume the person has 156,250 as his total income. Okay, this is the total income. But in calculating your taxable income, what do? You deduct the personal allowance, which is completely exempted from taxation purposes. How much is the personal allowance? It is 12,570. All right. You do not have to remember this value because it will be provided to you in the examination. Okay.
Okay, sir.
You just have to know how do you apply it. You do not have to remember the amount in that. Clear?
Okay, sir. Okay.
So that is what personal allowance is. So considering your entire income is 156, 250, on the entire income, you will not be paying personal allowance. You will not be paying your tax. You will not be paying tax. You'll be paying your tax after deducting your personal allowance because that is completely tax free. Clear on that?
Yes, sir.
We'll discuss more about personal allowance after we discuss the tax rates and all of that because this is just to give you an example. This is not an appropriate example to say because over 100,000, whenever the income of an individual exceeds 100,000, the personal allowance will be adjusted, which I have not explained right now. I'll explain that in detail as we move forward. Okay.
Yes, sir. Okay.
Yeah. Hmm. Now let's discuss about who are assessable people. Assessable persons are nothing but who, what is the criteria to be met in order to be considered liable for tax UK taxation purposes. That is what assessable person is. And in for taxation purposes, there is no major and minor. Any person who has any sort of income who is a resident of UK will be considered as an assessable person for chargeable income tax. All right.
Yes, sir.
Any person being a resident of UK and having some kind of income will be chargeable for income tax. You should remember this. Clear?
Yes, sir.
Next, we have something known as married couples. So these are all the small terms that you will have to remember when you have to solve the bigger questions. Okay?
Yes, sir.
So these are all small pointers like tax year is a small pointer, what is personal allowance is a small pointer, who are accessible. All of these are just small pointers that will become lead up to important questions as we move forward. Okay.
Yes, sir.
Next, we have married couples. Whenever there's a married couple, what do they usually do? They try to buy properties and all of them or joint bank or have joint bank accounts, correct?
Yes, sir. Yes.
So what happens when they have a joint bank account? Who should be liable? Under whom should we give the income? Should we give both of them 100% of the income? Like let's say there's a joint savings account, okay, between the couple. What happens? And in that amount, you have got 100,000 as interest. You have received 100,000 as interest. So this interest is an income for the couple.
Yes, sir.
Okay. If the interest is if the interest is income, do you think A and B, let's assume they're A and B, couple are A and the other is B. So do you think for both of them we have to take 100,000?
No.
Why not? Because it will lead to
Yes,
double taxation,
yes, sir.
same income. But instead of that, what do? We should always split it equally into 50-50 between the partners. All right.
Yes, sir.
Always remember it should be split equally between the partners unless there's any special mention that if they want to split it in any specific ratio. Let's say that the partners are like, because A is like, I contributed 70% into this account, so I want to be given 70% and the other 30% will be to you. In that scenario, what will happen? It will be split according to the ratio that they have mentioned. In the examination, that ratio will always be mentioned. Okay.
Yes, sir.
If that ratio is not mentioned, what do you do? It means it should be split equally between the
Equally.
partners. Clear?
Yes.
Unless and until mentioned to split the income in specific ratio, so it should always be assumed that the split of income is 50-50. Clear on this?
Yes, sir.
Any doubts so far? Have you understood what is meant by personal allowance? Who are accessible people? How is the income between married couples split?
Yes, sir.
And also one more thing, remember in taxation, whenever they say civil partners, it is also similar to a married couple. All right.
Okay, sir.
Civil partners are nothing but the people who belong to the LGBTQ community who are not married, but they should be treated as the same as married couples. All right.
Yes.
Great. Next, this is something that I've told earlier as well. Children, irrespective of the age, if they have any income, they will be considered for income tax liability. All right, clear on this so far?
Yes, sir.
Now let's see how do we calculate taxable income of an individual. When we are calculating taxable income of an individual is split into three categories. Okay. Do you have any idea what those categories are, Mohit? Or do you want me to? It's okay. I know that this is your second class. You need not have any idea. Just a generic question. Okay. In Yeah. Do you want to tell something?
So the individual may have income from trading or self-employed business.
Correct.
He may be an employee,
Correct. So it will be
and
salary income, employment income.
and he may have made investments from which
Correct.
he may
So
have some return.
correct. When they make investments, what will happen if they're into bank accounts? If they save money or deposit money into bank
Interest.
accounts, they get interest.
Yes, sir.
Or if they invest into shares, what kind of income do they get? Dividends.
Yes, sir.
These are the types of income that we will be considering for income tax as well. Okay. But what happens is these incomes are broadly split into three categories: non savings income, and dividend income. Okay.
Yes, sir.
So non-savings income is nothing but income that you generate based on whatever you earn. That is your non-savings income. It is based on what you earn, like salaries and all of those come part of dividend in non-savings income. So what all are the types of income that we will have? We will have property income, that any rentals that we have is property income. Next, we have income from self-employment, come from self-employment. After that, we have employment income. And for people who are retired professionals, they also get some sort of pensions, correct?
Yes, sir.
That is also part of your non-savings income. All right, pension income is what you will have in your non-savings income. Now coming to savings income. Non-savings income All of these are separate chapters in themselves where there are specific tax rules that are applicable to each of them. We will be discussing them in detail when we go to those chapters. But right now, it is just to give an overview about how the tax is to be calculated for the total income. All right?
Yes, sir.
Yes. And after that, the next is savings income. Savings income is nothing but bank interest. And sometimes what you have is you have building societies, correct? Where in societies also they offer deposits like cooperatives and all of those also offer some kind of deposits where you can deposit some money and you'll get interest on that, correct?
Yes, sir.
Cooperative societies, you must have studied about cooperative societies when you were a student in your 10th, ninth or 10th, correct?
Yes, sir.
So similar to that, you have something known as building society interest. Okay, that is also nothing but you deposit some money and you get interest at a later date. These two are categories of of savings income. Okay, only interest income will form part of your savings income. Is that clear?
Yes, sir.
And dividend income is self-explanatory. You know what dividend income is, correct? In dividend income, it is just dividend income. Okay.
Yes, sir.
So total of non-savings income plus savings income plus dividend income. How do you calculate taxable income? Now let's identify how to calculate taxable income. It is nothing but always remember when though it has been given in this format over here, income tax computation has been given as non-savings income, savings income, and in the linear format, always follow this format because it is easier. I will explain why it is easier as we move forward. Okay.
Yes, sir.
So always take your non-savings income, then your savings income, then your dividend income, then your total. So total will be the sum total of all of these incomes is equal to sum of all of these. Clear on that? This is your total income. But as I've mentioned earlier, is the on your total income, do you entirely pay taxation? No, we don't. Correct?
Yes, sir.
Because we have studied about something known as personal allowance. So that is what comes into picture. After once you calculate your total income, from that you deduct, there are two types. One is reliefs that you get and the other is your personal allowance. Okay. We'll discuss about what reliefs are in the tomorrow session. What are the different types of reliefs that are available in tomorrow's session. Okay.
Okay, sir.
Less reliefs because non-savings income and savings income itself is a bit complicated to understand. So I do not want to put you through a lot of stress of a lot of content in one day. So let's take it as slow as possible, but as thorough as possible. All right.
Yes, sir.
So once you deduct the reliefs minus X, okay, I'll keep it as this less reliefs, less personal allowance. How much is a personal allowance?
12,7, I think.
You again do not have to remember it. So you can literally
12,570.
class
Yes.
openly tell to me, sir, refer to the examinable documents always. Okay.
Okay, sir.
That is only so that it will really help you. See, right now, what am I doing? I'm making it a practice. Though I know how much is personal allowance, what am I doing? I'm going back and referring to it. So whenever in the exam also, you'll make it a habit for yourself to refer to it. Okay. After deducting your personal allowance of 12,570 gives you your taxable income. Okay. This will give you your taxable income. On that, you will apply the tax rates that are applicable. Clear on this so far?
Yes, sir.
Any doubts until now?
No, sir.
Can you tell me what are non-savings income? What are the different types of non-savings income?
Yes, sir.
Yes, please tell.
Uh, uh, Property income, employment
Correct.
income,
Correct.
trading incomes.
Sorry.
Trading incomes,
Trading income. Correct.
pension.
Pension income. Absolutely right. That's exactly how you put it. Clear? Now, let's move on to the next topic. Okay, as we've discussed, this is the classifications of different income, and all of these incomes we will study in detail as we move forward in our syllabus. For now, this is all you'll have to remember. Okay. Like we have discussed about what is trading income. Trading income is nothing but income from profits that you generate on on any trade that you do and all of that. So you know all of these, right? We do not have to discuss any of these, correct?
Yes, sir.
If you want me to explain them, I can explain them. You know what trading income is? Yes.
Yes, sir.
What employment income is? Yes.
Yes, sir.
Pension income?
Yes, sir.
Great. Property income?
Yes, sir.
What is property income?
Is the return which we will get from the investments.
Correct. It is
Uh,
the rentals in
yes, sir.
rental income that on you you purchase properties and from that you leave the rents and all of that. That is your non rental income. Okay.
Yes, sir.
And the other two types, savings income and dividend income, are something that we have already discussed.
Yes, sir.
So this is also done. Now let's try to understand what are the types of income that are exempted. Okay. First, any income, like you go to a casino and you make some money out of it by betting on blackjack and all of those games, you do make some money, correct?
Yes, sir.
But that income is not applicable for your taxation purposes. That kind of income is always exempted. This is something that you should remember very much because this will be tested. This will literally be tested in your examination where they might be like, they say betting income is X. Now, when you're calculating your income tax, what do people tend to do? Because they are very sure of what savings income is and what dividend income is, they tend to add it as a part of your non-savings income. But does it come as a part of your non-savings income?
No, sir.
No, because it is exempted. Okay. The other kind that is exempted is also lotteries. You know what lotteries are? You purchase a ticket. You're like, okay, now I am if I get this ticket as a lucky draw, then I'll be getting money out of it. That income is also completely exempt from taxation purposes. Okay,
Yes, sir.
clear on that? And same thing with if you remember in the yesterday's class, we were talking about individual savings account.
Yes,
Correct,
sir.
where we say that taxation is beneficial for asking people to promote savings and all of that. So what happens if any person invests some money into an ISA account? Okay, whatever returns that they get on that ISA account are completely exempted from taxation purposes. Is that clear?
Yes, sir.
And similar to that, you also have interest from national savings and investment certificates. This is also similar to individual savings account where you purchase the certificates of NS&I and whatever interest that you receive on those are completely exempted for taxation purposes. Clear?
Yes, sir.
So it is very important to remember these three types of exempt income. Otherwise, it will be difficult. Are you making a note of them as we are following through?
No, sir, not now.
Please ensure that you keep your notes beside you when you're studying so that it will be easier. As always, remember more than you listen. When you write it down is when it actually helps you remember the concepts better. And tax being a very heavy concept, it is important to remember as much as possible. All right.
Yes, sir.
Okay.
Okay, sir.
Yeah. So what are exempt incomes now? One is, can you tell me, Mohit?
Individual savings accounts,
Correct. Income received from individual savings account. Correct.
income from NSI certificates,
Correct. Absolutely
uh,
right.
betting lottery and
Correct.
bond winning.
Yeah. Premium bond winnings is not a very majorly tested thing, but yeah, it is also an exempted income. Okay.
Yes, sir.
Clear on this?
Yes, sir. Sir, one doubt.
Yeah.
We get interest on debentures. In which category will it classify?
Interest will be savings income.
Savings income,
Yes.
whether it is bonds,
Yeah,
debenture.
yeah. Bonds are also something similar to debt only, right? So debt is some you will be receiving interest, it will be part of your savings income only.
Okay, sir. Thank you.
Okay. Yes. Clear. Now reliefs are something that I've told you we'll be deducting it, but we'll discuss that further as we move forward. Okay.
Yes, sir.
Yes. Now let's come to the most important point of personal allowance. Okay, personal allowance is the basic. Like once you have understood what the different types of income are, this pro forma that we discussed right now about taxable income, this forms an entire basic. This forms the basis for your entire income tax. If you are thorough with this, your computations become easier and easier. All right.
Yes, sir.
So what did I say that the personal allowance is 12,570, correct?
Yes, sir.
So what is that personal allowance? It is completely tax-free income. Yes.
Yes, sir.
Now let's assume that an individual is having non-savings income of 4,500, savings income of 8,000, and dividend income of 4,000, and total. And with this is a total. So we will say this sum to be this much, 16,500. Is it more than 12,570?
Yes, sir.
So how do we deduct personal allowance? Do we deduct it less personal allowance? So one income itself is not having 12,570. So do we just show personal allowance as minus 12,570 here and ignore whichever incomes they are part of? No, we don't. Always remember, personal allowance should be first given priority to first priority to non-savings income, second priority to savings income, and third priority to dividend income. All right. How much ever the incomes are, the first priority of personal allowance will be to non-savings income, then to savings income, then to dividend income. Here, savings income is higher of 8,000, but that does not mean we should give it the first priority. First, we should deduct personal allowance from non-savings income by saying minus 4,500. And here, next is minus 8,000 for savings income. Because even then, what is how much is it happening to? It's going up to minus 12,500. But we have dividend income and the personal allowance available is only 70 pounds, correct?
Yes, sir.
So we will be deducting minus 70 pounds here. Is that clear?
Yes, sir.
And that is how you should show your is equal to sum these three here in the total column, which is exactly why I tell you that whenever you're presenting your answers, always present it in this format of non-savings income, savings income, and dividend income rather than linearly. Because if you keep it linear, then you would get confused. Got it?
Yes, sir.
Now what will happen? This will become is equal to 0, correct?
Yes, sir.
0 is equal to this is also completely being covered. So this plus this will be 0. But this will be have the dividend income. You will have dividend income. And let me tell you beforehand, interest tax rates for non-savings income and savings income are one. And for dividend income, you have different tax rates. Okay. You do not have to remember them. They will be provided to you here. So because of that, what will happen? Now you know that only because dividend income is available, you will be applying the dividend income tax rates on it. Is that clear?
Yes, sir.
That for which it is important that you always present your incomes in this format. Any doubt so far?
No, sir.
It should always, as it has been mentioned here as well, the first priority should be given to non-savings income, then to savings income, and then to dividend income. Clear on that?
Yes, sir.
This is done. Now let's take an assumption. An income, let's delete off dividend income, and let's say we have only non-savings income and savings income. Okay, how much is that coming up to? 12,500, correct?
Yes, sir.
But how much is our personal allowance? Total personal allowance available?
12,570.
12,570, correct? But if our income is less than personal allowance, then the personal allowance will be restricted to how much ever our income is there. Okay, the excess personal allowance is lost,
Okay, sir.
which means if it is 12,500, you cannot take 12,570 and be like, and you cannot be like, okay, my taxable income is minus 70 pounds, so I'll get a return from in tax department or HMRC. That is not how it works. If income is less than personal allowance, if income is less than personal allowance, then personal allowance is restricted to total income. Is that clear?
Yes, sir.
Any doubts until here? No?
No, sir.
Great. Now, as I mentioned earlier, whenever see 12,570, what is why are we providing a personal allowance or tax-free income for anyone? So that people who are of low income backgrounds are getting some tax relief. So what if they're only earning 34,000 and they pay 20% of tax on it? Do you think anything is left for them? The money
No.
is less left lesser. Correct. So but if you're providing 12,000 pounds of reduction, they'll be able to save some money and they'll be able to save some money for their personal usage, correct?
Yes, sir.
Which is exactly why a personal allowance exists. But do you think this 12,570 actually affects any person who is of the higher income range? Like, do you really think like someone of range of Mukesh Ambani? Do you really think they would be affected by the 12,570 pounds?
Not as much as the lower class.
Correct. Not as much as the lower income people. So for that reason, what UK HMRC does is HMRC says if any person has adjusted net income. I will explain what adjusted net income is. I just wanted to make a note of it. Of over 100,000, then their personal allowance is reduced. Okay,
Yes, sir.
this is what. So any person who has an adjusted net income of 100 exceeding 100,000, then their personal allowance is reduced. Okay, which means first, in this, there are two items that are two points to be understood. One, what is the adjusted net income and how is the personal allowance reduced? Correct?
Yes, sir.
So, adjusted net income. Adjusted net income is nothing but your total net income after your reliefs. So, until reliefs, we have discussed here net of reliefs, income, total income, net of reliefs is your net income. Okay?
Yes, sir.
Minus less gross gift aid donations and less gross personal pension contributions. Gross personal pension contributions. You just have to understand this till here. I will explain what gifted donations are, personal pension contributions are in tomorrow's class. Okay.
Okay, sir.
So your total net income after your reliefs, from that if you deduct gross gifted donations and gross personal pension contributions, gives you your adjusted net income. Okay, now let's take an example. Here, if the net income is let's say 125,000, okay,
Yes, sir.
and gross gifted donations are let's say 2,000, and personal pension contributions are also let's say 2,000. Now, what is the adjusted net income is equal to this minus this minus this, correct? Is it not 121,000?
Yes, sir.
Is it over 100,000?
Yes.
Which means your personal allowance is being reduced, correct?
Yes, sir.
Personal allowance. So personal allowance is to be reduced. So how do we reduce it? What is the rule? How much do we reduce it? For how much ever, I'll tell you. How much ever adjusted net income is over 100,000, 50% of that ANI is acting as a reduction to PA or personal allowance. Okay. I'll
Yes.
explain that. Do not worry. It is a bit complicated to understand, but don't worry. Okay. Now our adjusted income is 121,000.
Yes, sir.
So how much is it over 100,000?
21,000.
21,000. Exactly. So is equal to 121,000 minus 100,000. Did I add a correct? No, one more zero is to be added. So it is 21,000. With that, what should we do? It should be multiplied by 50%. Okay. So now what is it giving us? 10,500. Correct?
Yes, sir.
This is the reducer. This is the reducer, which means adjusted personal allowance will be adjusted personal allowance will now be is equal to 12,570 minus 10,500. Okay,
Yes, sir.
clear on that?
Yes, sir.
How much ever adjusted net income is over 100,000, that should be multiplied by 50%, and whatever we get should be subtracted from your personal allowance in order to get the adjusted personal allowance. Okay,
Yes, sir.
clear on that one?
Yes, sir.
Also, one more important thing to remember, this adjusted net income that we are calculating is only to only for personal allowance, identifying the personal allowance. Okay.
Yes, sir.
So when your net income is 125,000, from that we will deduct PA of minus 2070 to get our taxable income. Adjusted net income is nowhere related to our taxable income. Adjusted net income that we calculate of gross net income minus gross gifted donations minus gross personal pension contributions is wholly and solely for the purpose of calculating the personal allowance and nowhere related to your taxable income computation. Clear?
Yes, sir.
Did you make a note of this? Because I have seen many students who have come till the very end of their preparation and also get confused with this concept. So I genuinely want you to make a note of this. Okay. If you want, I
Okay,
can
sir.
give a 2 minutes break for you to make a note of it.
Sir, I'll make tomorrow by watching it at the highest speed.
All right, sure. But remember, this is only to calculate the personal allowance reduction and not to calculate your taxable income. So your taxable income will be 122,930. Is that
Okay,
clear?
sir. Yes, sir.
Yes. And what will happen if your income increases to 125,140? Okay. Let's assume this income is 125,140. Okay. And let's actually skip the both of these. Let's delete them. There are nothing like it. Your net income is your adjusted net income, correct?
Yes, sir.
Now, what will your reducer be? Is equal to 125, 140 minus 100,000, correct?
Yes, sir.
Which will give you 12,570.
Yes, sir.
So, what is our personal allowance at that point?
Zero.
It will be zero. Exactly. So, whenever an individual's income exceeds 125, 140, they will have zero personal allowance available to them. Clear on this?
Yes, sir.
So any person who is having an adjusted net income over 125, 140, they will have zero personal allowance. Make a note of this. Okay.
Yes, sir.
And with this, are you clear with personal allowance?
Yes, sir.
What is the order of priority to be given when reducing the personal allowance?
Okay.
So personal allowance should be deducted from which kind of income first, second from which kind of income, and third from which kind of income?
Non. non-saving income, then saving income, then dividend income.
Absolutely right. Clear. So you're clear until here, right? You've understood how do we reduce your personal allowance and
Yes.
what is our normal personal allowance and all of those, correct?
Yes, sir.
Yes. So always remember, whenever they say a person's income is within is almost within is under 100,000, you do not have to calculate the adjusted net income at all because the income is only under 100,000. That means there will be no reduction. Clear?
Yes, sir.
And at the similar time, if they say it is over 130,000 and if they have not mentioned about any gifted donations or personal pension contributions, you do not have to calculate the adjusted net income at all because you know that the person's income is exceeding 125, 140 and they
Yes.
do not have any other deductions like gross gifted donations or personal pension contributions. So their entire personal allowance is lost. They do not have any personal allowance.
Yes, sir.
All right.
Yes,
With
sir.
this, we have successfully understood what is a personal allowance. Okay.
Yes, sir.
So this is exactly what we have discussed right now. Something similar to this. Do you want to solve this as a question right now?
Yes, sir.
Okay. Let's keep it here. Let's take Ethan received trading income of 110,000 in the tax year 25-26. Here, if you see, they have clearly mentioned in the tax year 25-26, which means it is from 6th April to 5th April and not first Jan to 31st December. Okay.
Yes, sir.
Whenever they say tax year 25-26, it is always from 6th April 2025 to 5th April 2026.
Yes, sir.
Okay. It
Yes,
says
sir.
the income is 110,000 and has also made a gifted donations of gross 4,000. Okay.
Yes, sir.
Now what is happening? We know the net income. There were no other reliefs that have been mentioned. So net income is 110,000, correct?
Yes, sir.
Do we have any other kinds of income? We only have trading income.
Yes, sir.
So from that, what do we have to calculate? We have
Adjusted
identified that it is
adjusted net income.
correct because we have identified that the income is over 100,000. So because we have identified it is over 100,000, we calculate adjusted net income. So from net income, what do we deduct? Less
Gifted
gro-
donation.
gross gifted donations. I will tell you why gross is important in tomorrow's class. But remember, it should always be gross gifted donations and gross personal pension contributions. All right.
Yes, sir.
Yes. So gross gifted donations, how much do we have right now?
4,000.
4,000. Absolutely right. So it will be minus 4,000, which means adjusted net income
1 lakh
would be
60.
1,06,000. Correct? 1,06,000. Now, personal allowance. How much is our personal allowance? We know it is 12,570. Correct?
Yes, sir.
Less reducer. How do we calculate reducer? Is equal to 106,000. Can you tell me
Minus 1 lakh
minus 100,000
into 50%.
into 50%? Absolutely right, which is it will be reduced by 3,000. So adjusted personal allowance would be is equal to this minus this. Will give you our adjusted personal allowance. Okay.
Yes, sir.
Now what are they asking us? They're asking us to calculate taxable income. What is taxable income?
It's
To-
the net income less
Total
person.
income is 110,000. Correct. Net income is 110,000 less
Personal
personal
allowance.
allowance. Correct. Less personal allowance, which will be minus this 9570. So taxable income would now be equal to sum total of both of them, making it 100 430. Clear?
Yes, sir.
Always remember, follow the steps in the same manner so that you can solve it in a systematic way and it is also clear in your head. All right.
Yes, sir.
If you have any doubts, you can always reach out to me. Now, clear on this so far?
Yes, sir.
Now, let's try to understand how do we calculate income tax liabilities. So for this is a bit complex to complexly given to you, but let me make it easier for you. Okay. Whenever an individual has, this we are talking about non-savings income or savings income, 0 to 37,700 will always be taxed at 20%. Okay. That means you'll have to pay 20% of tax on your taxable income that falls between 0 to 37,700. Okay.
Okay, sir.
From 37,701 to 125, 140, which means any income that is over 37,700 but lying under 125, 140 will be taxed at 40%. Okay.
Yes, sir.
If the income exceeds 125, 140, then you will tax it at 45%. Okay.
Yes, sir.
So here the individual who falls between 0 to 37,700 is known as a basic rate taxpayer. Individual who falls between 37,701 and 125,140 is known as higher rate taxpayer. And taxpayer and the individual who exceeds 125,140 is known as an additional rate taxpayer. Okay.
Yes, sir.
So how does this work? Let's assume the same example. Let's take the same example of this person. We have identified it to be 100,430, correct?
Yes, sir.
Has to be taxable income. So what will happen first? 0 to 37,700. He's definitely having income of over 37,700, correct?
Yes, sir.
So this entirely will be taxed at 20%. Okay. So
Yes,
you
sir.
can simply do is equal to 37,700 into 20%. Clear?
Yes, sir.
You have got it. Next we have how much is the income? He's 100,430. So he's already obviously in only this criteria and he's not going into this criteria, correct?
Yes, sir.
So that time what will happen? 37,701 to 100,430 should be taxed at 40%. Clear?
Yes, sir.
Which means it should only be 100,430. Always remember this is how you can simply do it. 100,430 minus 37,700. It should not be the entire amount. It should only be from this amount to this amount. It will be taxed at 40%. All right.
Yes, sir.
So which will give you 25,092. So making the total liability to be 32,632 pounds. Is this clear?
Yes, sir.
This is how we calculate when it is non-savings income. Are you having any doubts? We will come to savings income. Savings income also the tax rates are same, but we have one thing additional that is known as nil rate band and zero rate band. We'll come to that as we progress. But are you having any doubts so far? Mohit, is
No,
everything clear
no,
for
sir.
you until now?
Yes, sir.
Okay. If you have any doubts, you can always stop me at any point of time and I'll be happy to clarify. Clear on that?
Yes, sir.
Now let's see how we'll be solving this question. Let's try to solve this question. Okay. What is happening? Amir has taxable trading income of 21,165 and employment income of 3,000 for the tax year 25-26. He has no savings income or dividend income. So what is trading income? Which type of income is it?
Non-saving income.
What about employment income?
Non-saving income.
Non-savings income. Absolutely right. So we'll have only one line. We'll have only one kind of thing, correct? Non-savings income. Yes.
Yes, sir.
So what do we have now? First, we have trading income. Don't worry, these questions might look easier, but these are important in order to set our foundation. As we move ahead, we do have practice sessions planned as well, where we will solve complex questions and all of those. Okay.
Yes, sir.
This is trading income. Next, we have employment income. Employment income is 3000. Now, what is the total income? Sum both of these incomes, correct?
Yes.
24,165. Do we have to calculate adjusted net income for this individual?
No,
Why not?
because its income is less than 100,000 pounds.
Absolutely right. So we can directly take full personal allowance. Less personal allowance. Do not have to remember it. We do have it available with us. It says personal allowance is 12,570. So minus 12,570, giving us our taxable income to be is equal to sum of these both. Always remember, whenever you're solving section C questions, try to use functions like is equal to sum and all of that so that you do not make errors in the calculations. Okay.
Yes, sir.
This is your taxable income. Now, how do we calculate taxable income? Taxation, tax liability is to be calculated based on taxable income. His taxable income is 11,595.
Yes, sir.
So where does he fall? Does he fall in both basic
First
rate?
level.
Only first level, correct?
Yes, sir.
So you can simply do 0 to 11,595 at 20%, correct?
Yes, sir.
Equal to 11,595 into 20%, 2319. This is your tax liability. Is this clear?
Yes, sir.
Always, whenever you're solving a question, make sure that you're presenting your calculations even in your rough work this way so that it becomes easier for you as you move to complex and complex questions. All right, clear on this?
Yes, sir.
Great. Can you solve this question now? Or do you want me to solve this question? Let's solve this question because it has higher. Okay, let's see some question which has additional rate as well. Yes, we have solved one question for higher rate, right? We'll solve a question which has additional rate as well. Okay.
Okay, sir.
It says Thomas has taxable trading income of 135,000 and employment income of 33,680. He does not have any savings income or dividend income. Okay. Now both of these are which kind of incomes?
Non-saving incomes.
Absolutely right. So first we have trading income, which is 135,000, and we have employment income, which is 33,680. Okay. Make he does not have any savings income or dividend income. Now total income is equal to sum is equal to 168,680. And they have not mentioned about any gifted donations or personal pension contributions also, correct?
Yes, sir.
So do we take personal allowance? Do we have any personal allowance available of
No, sir.
125?
No, sir.
Why not?
Because it has exceeded the.
It has exceeded the
Yes, sir.
125,140 mark. Correct? So,
Yes, sir.
but always remember in your section C, you should still show less personal allowance and write zero here because if you don't write this, you will lose out on half a mark. Though the answer is zero, it is still important that you show it. Otherwise, you'll lose out on half a mark over there.
Yes, sir.
All right.
Yes, sir.
So now your taxable income. How much is your taxable income?
168. 680.
168, 680. Perfect. Now, what is happening? Is this exceeding? We have three rates. One is 1 to 37,700, 37,700 to 125, 140, and over 125,140. So, is this person exceeding that one?
Yes, sir.
Yes, they are. So, because of that, we will have to take the additional rate as well into consideration. So, first we know 0 to 37,700 will directly be is equal to 37,700 into 20%, correct?
Yes, sir.
This is sorted to us. Next, we have 37,700 to 125, 140, correct?
Yes, sir.
7,701 to 125, 140. Here, what do we do? Is equal to 125, 140 minus 37,700 into 40%. Okay, this is exactly how you should do it. Okay,
Yes, sir.
you will be getting 34,976. Clear?
Yes, sir.
Now, how much is over over 125,140 will be taxed at 45%, correct?
Yes, sir.
So 125, 141 to 168, 680 should be taxed at. How much should it be taxed at?
45%.
45%. Absolutely right. So here it should be nothing but 168, 680 minus 125, 140 into 45%. Clear?
Yes, sir.
Always remember you show it this way so that it becomes easier for you. So however you're calculating, it becomes easier for you to understand. So total tax liability would now be is equal to sum of these three, making it a total of 62,109. All right.
Yes, sir.
So whenever you're solving those, it is very much important to remember about personal allowance. You remember why I told in the beginning of the class that it is the foundation? Because
Yes, sir.
students tend to forget it. It exceeds 100,000. We should remember that personal allowance is to be adjusted, but students forget it. Because of the students forgetting it, what happens? They take the minus 12,570 here. Their taxable income is wrong. Because of that, their tax liability calculated is also gone to a toss.
Yes,
So
sir.
the foundation of personal allowance, the tax rates about married couples having the split of 50-50% is very much important to remember throughout your income tax preparation.
Okay, sir.
Okay,
Yes, sir.
is that clear until here so far? Any doubt so far?
No, sir.
All right, great. With this, we have understood about how the income for how the income is to be calculated. Clear for how the income tax liability is to be calculated for non-savings income. Clear?
Yes, sir.
Now let's move on to savings income. Savings income, like you have asked me a question, remember about bonds and all of those
Yes, sir.
from company loan stock and all of those interests will be part of your savings income only. Clear on that?
Yes, sir.
And what is the other thing to remember? Usually banks do give out interest for the year end or quarters, correct?
Yes, sir. Yes.
But because for taxation purposes, we should again consider savings income. Interest should only be considered for what should we be considering it?
From 6th April to 5th April.
6th April to 5th April, which is should be considered for tax year. That is 6th April to 5th April. Clear on this?
Yes, sir.
This is a fundamental that should be remembered again. Always for income tax, 6th April to 5th April is a blind thing that you should be remembering at any cost. Okay?
Yes, sir.
Now, so you have understood the tax rates, correct? 0 to 37,700 is 20%, 37,701 to 125 is 140 is 40%, and whatever exceeds 125,000 140 is 45%. You have understood those?
Yes, sir.
Those will be similar to savings income as well. Okay.
Okay, sir.
But for savings income, we have got few additional adjustments. Okay. For savings income, we have some additional adjustments. What are those? One is if the total net income of the individual, okay,
Yes, sir.
net income of the individual is less than 5,000. Okay, total net income of the individual is less than 5,000 and savings income falls in that in that 5,000, then it will be taxed at zero. Okay,
Yes, sir.
let me tell you how. If let's take non-savings income and let's take savings income. Okay, we have employment income of, okay, let's take 14,000 and say, okay, and bank interest, we have 3,000. Okay,
Yes, sir.
are you sleepy, Mohit? I know
No,
it
sir.
is late at night. Don't. Let's try to wrap it up faster. Okay, this is how you consider it non-savings income and savings income.
Yes, sir.
We get our total income, correct?
Yes, sir.
So total would be nothing but is equal to sum. Let me write total first here is equal to sum, or we have only one, so let's keep it simple. Here is equal to this one. Our total would be equal to sum of these, correct? 16,500, correct?
Yes, sir.
From these, what should we reduce now?
Tax reliefs,
We do not have any. Let's assume we do not have any tax reliefs.
personal allowance,
Correct. Less personal allowance. First, which one should I give priority to when reducing personal allowance? Should I
NSI.
correct? So for income, non-savings income is 14,000. So can I be like I'll give it 12,000 and 2,000 to 10,000 to non-savings income and then 2,000 to
Mm,
savings income?
no, sir.
We can't. How much ever is there, full should be given to non-savings income, then to savings, then to dividend income. Okay.
Yes, sir.
So is the savings income getting any personal allowance?
No.
No. So this will again be equal to sum of these both. So now taxable income, what is happening? This will be sum of these 1430, 2500 and 3930, correct?
Yes, sir.
So after personal allowance, you're getting this much. So now what is happening? This 1430 is non-savings income. For non-savings income, which tax rate does it fall into?
20%.
20%. So income tax liability also ensure that you calculate it separately for savings, non-savings and dividend income. Okay.
Yes, sir.
Liability for non-savings income would be is equal to 1430 into 20%, correct? Straight up, straightforward, basic rate taxpayer,
Yes, sir.
it will be 0%. But for savings income, is the income of that person falling under 5,000?
Yes, sir.
Total income of that person. And
Yes,
in
sir.
that 5,000, is the savings income falling as a part of it?
Yes.
So whenever this happens, then it will be nil rate band is applicable. Okay? Nil rate band is applicable, which means the savings income falls into the first 5,000 of taxable income. Okay?
Yes, sir.
Of the total income, then it will be zero. So it will be is equal to 2,500 into 0%, making your total tax liability to be equal to sum of these both to be 286. Is this clear? Did you understand what is the nil rate band?
Yes, sir.
But now let me change this question. Let me make this 9,000. Okay. Now what happened? Our income has increased to 10,040.
Yes, sir.
In that case, the savings income nil rate band, will it be applicable? The
No.
starting rate nil rate band, it will not be applicable because it will only be applicable for the first 5,000 if it falls into 5,000 of the total income.
Yes, sir.
Okay. Always remember this. Clear on this point?
Yes, sir.
Next, we have our savings income nil rate band. Now, what kind of a taxpayer is he? Is he a,
Individual.
is he a basic rate taxpayer or a higher rate taxpayer?
Basic.
Basic rate taxpayer, correct? When they are a basic rate taxpayer, what happens is first 1000 of their savings income is taxed at 0%. Okay,
Yes, sir.
clear on that?
Yes, sir.
Next, for example, if they are a higher rate taxpayer, their first 500 of their savings income is taxed at 0%. Okay,
Yes, sir.
and if they are an additional rate taxpayer, they do not have any nil rate band. Okay,
Yes, sir.
so here there's a small correction that I would like to make to myself. Here, if you see, if the savings income is still falling within the first 5,000, correct? Like in the total of 10,430, the non-savings income is only 1,430, which means the remaining 9,000 is of savings income, correct?
Yes, sir.
So in that case, what will happen? Savings income starting nil rate band would be starting nil rate band would be up to 1,430. So this would be is equal to 5,000 minus 1,430. So 3,570 of that income will be taxed at 0%. Okay, clear on that? Did you understand my point?
Yes, sir.
So because it is falling, the savings income is falling within the first 5,000 of taxable income.
Yes,
In
sir.
that case, it will be taxed at 0%. So 3,570, let me write it here, 3,570 into 0%. Next, so that means next, what do we have? Is he a basic rate taxpayer or a higher rate taxpayer?
Basic.
Basic rate. So how much is the nil rate band available?
1,000.
1,000. Nil rate band of 1,000 into 0%, correct?
Yes, sir.
It would be 0. Again, this would be 0. But next, what is happening? Is he having any amount remaining in his savings income after that? 3,570 is removed and 1,000 is removed.
Yes, sir.
How much income is remaining?
4,430.
The income would be is equal to 9,000 minus 3,570, 570 minus 1,000. Correct? 4,430. So, and now non-savings income, how much is our basic rate threshold? 0 to 37,700, correct?
Yes, sir.
So in that 0 to 37,700, what happened? 1,430 has been used up here.
Yes, sir.
Again, remember, always very much important. This is a point that students tend to miss. The savings starting rate band and nil rate band will also be a part of this threshold of 0 to 37,700. Okay,
Yes, sir.
which means in this 0 to 37,700, 1,430 has been used up here, 3,570 has been used up here, correct?
Yes, sir.
And 1,000 has been used up here.
Yes, sir.
After this, is he still falling in the basic rate or is he going to higher rate?
Still in the basic rate.
Basic rate, exactly. So this 4,430 should now be multiplied with 20%. Will give you 886 as your liability. Clear?
Yes, sir.
Now total income tax liability would be is equal to sum these three comma this one as well, non-savings income as well, right? Because we have this is also part of the total tax liability.
Okay, sir.
So whenever you're calculating the tax liability, show the non-savings income calculation separately, savings income calculation separately. But finally, when they ask you to give the total tax liability, sum up all of them. That is when you should write it. Okay.
Yes, sir.
So always remember first, if it falls within the 5,000, it is 0%. If the income falls between the 5,000, 0%. If they are a basic rate taxpayer, they get nil rate band of 1,000. If they are higher rate, they get 500. If they are additional rate taxpayers, then it is nil. Is this clear?
Yes, sir.
Any doubts on this so far?
No, sir.
Great. So let's move on to the next point. This, as I've mentioned earlier, the basic for non-savings income and savings income, the tax rates are similar after the basic rate band and all of these are completed.
Okay, sir.
Okay.
Yes, sir.
Any doubts on this so far?
No, sir.
Did you find it interesting and easy to understand, or were you finding it difficult to follow through?
No, sir. It's easy.
Great. Okay.
Just
Let's
require.
Yeah, it requires practice. It definitely requires practice, and it's very important that you practice as many questions as you move forward with the preparation in tax. Okay.
Yes, sir.
In taxation, the only way that you can move forward is with your practice. Otherwise, you cannot move forward. Like all of this theory, remembering it and applying it, both of them play a very crucial role. Okay, clear on that now?
Yes, sir.
Now, did you understand how we do it?
Yes, sir.
Let's try to solve one question of having savings income and non-savings income together.
Yes, sir.
Hmm. Okay, let's take up this question, 29,000 question. Okay,
Okay, sir.
let's take up simply instead of taking all of those because we've already solved one question using the basic rate band. We'll take up this question where it says non-savings income and savings income. These both are the only types of income that are available. And as already mentioned, always remember, always follow this pro forma only. Otherwise, you will get confused.
Okay, sir.
So it will be non-savings income, savings income, and then it will be total income. Okay.
Yes, sir.
Now, first, what does it say? Jane has calculate Jane's income tax liability based on Jane has received 3,000 interest during the year, and she also had employment income of 29,000. Okay, let's calculate employment income. We know 9,000, and bank interest that she has received will be 3,000. Okay, correct.
Yes,
Giving
sir.
it a total income of equal to this, equal to this is equal to sum of these both. Always, this is how you should ensure that your performers are. It becomes easier. Now, do we have to calculate adjusted net income for this individual?
No, sir.
So full personal allowance is available? Yes.
Yes, sir.
You forgot about personal allowance, didn't you? Did you?
No, sir. No.
Okay. So personal allowance. Should I go for savings income first?
No, sir. Non-saving income.
Correct. Minus 12,570. It will get 0. This I can drag it down. Correct.
Yes, sir.
We got our taxable income now is equal to sum total of both of them. Correct.
Yes, sir.
See, using the formula, this is the best advantage. You can literally drag the formula and you got the same answer. You got the same answer for all of these, correct?
Yes, sir.
So non-savings income, taxable income is 16,430. Dividend savings income is 3,000 and your total income is 19,430. Correct?
Yes, sir.
Now what is happening? Let's take up tax liability computation. So first, what do we have? Non-savings income. Non-savings income, do we have any basic nil rate bands or anything like that?
No, sir.
We don't. And the non-savings income we know is 16,430.
Yes, sir.
So that means at
20,
what rate? At
20%.
20%. Correct. Non-savings income, it will be is equal to 16,430 into 20%. Absolutely right. Next, we will move on to savings income. Now, savings income falling into first 5,000 of the total income?
No, sir.
It is not. So starting nil rate band is available?
No.
It's not. Next, is he a basic rate taxpayer or higher rate taxpayer?
Basic.
So how much nil rate band is available?
1000.
Nil rate band, absolutely right. Nil rate band 1000 into 0. Correct?
Yes, sir.
Now, how much is the remaining? So, how much savings income is remaining? 2000.
2000.
Correct? What rate should it be taxed at?
20%.
Why? Because it is still falling under the threshold of 37,700,
Yes, sir.
meaning at 20%, which means 2000 into 20%. So, this would be to is equal to 400. So, total would be total income tax liability would now be is equal to sum total of all of these. Is that clear? This is your total income tax liability.
Yes.
Calculate income tax for non-savings income separately, calculate it for savings income separately, calculate it for dividend income separately. After you calculate all of them separately, add it together to get the total income tax liability.
Okay, sir.
Is that clear?
Yes, sir.
Are you having any doubts so far?
No, sir.
Yeah, like if you can see, this is the exact answer that we have got. Yes, no,
Yes, sir.
3686. All right.
Yes, sir.
Do you have any doubts on these so far?
No, sir.
Okay. So, do you want to take up solving this question? Can you solve this question and send the answer to me?
I'll try, sir.
Sure. I want you to understand the interest is bank interest is 7850 and
Okay.
they had the income tax of 145,000. Or do you want to solve it during the class only right now? Whatever works for you. Actually, let's solve this in the session only. Okay.
Okay, sir.
Do you want me to end it here? If you think it is too much, we can end it and we can resume it tomorrow. Not an issue at all.
No, sir. We can take up this question.
Sure. Okay. So here what has been mentioned? Alonso received bank interest of 7850 and they are having trading income of 145,000. Okay. Non-savings income, savings income. Total. If you see in any of the questions, irrespective of how we go, we are ensuring that we follow the same pro forma.
Yes, sir.
Income would be 145,000 and bank interest would be
7850.
7850. Yes. So total would come up to is equal to this is equal to this is equal to sum of these. Correct?
Yes, sir.
Total income less personal allowance. How much should it be?
Sir, we will first calculate additional net income, adjusted net income.
Do we have to calculate it?
Yes, sir.
Absolutely right. How much is the adjusted net? How much is the adjusted net income? Sorry. Okay, let's take adjusted net income is same as net income because we do not have any gifted donations or personal pension contributions, correct?
Okay, sir.
So adjusted net income is 152,850. Correct?
Yes, sir.
How should we have any reducer? What is the personal allowance reduction that we can have maximum?
12570.
120, 12,570. So that means how much is this excess over adjust income? It
It
should be,
will completely we get reduced, sir.
it will completely get reduced. Exactly what I told earlier, which means whenever the income is over
Zero.
125, 140. Okay, whenever the total income, adjusted net income is over 125, 140, always remember PA is lost. Okay.
Yes, sir.
Make a note of this point. So now do we have any personal allowance here?
No, sir.
0. Here also it will be 0. Here it will be 0. Correct?
Yes, sir.
Now which will give us our taxable income is equal to sum. Clear?
Yes,
Now
sir.
let's try to calculate our income tax liabilities. Income tax liability. First, what do we start with? Non-savings income. Okay.
Yes, sir.
He's obviously above the threshold of 37,700.
Yes, sir.
Let's keep this beside us. Okay.
Yes,
So
sir.
0 to 37,700 at 20%. Correct?
Yes, sir.
Equal to 37,700 into 20%. Is he over the 125, 140 limit as well?
Yes, sir.
So he's over that. So 37,701 to 125, 140 would be taxed at how much?
40%.
40%. Absolutely right. So here it would be is equal to 125, 140 minus 37,700 into 40%. Clear?
Yes, sir.
Next, the other is over 40, is at 45%. There's only one other tax rate, correct?
Yes, sir.
So it would be 125, 141 to 145,000 at 45%. So it would be, how do you calculate it? Equal to 145,000 minus 125, 140 into 45%. You got your income tax liability for non-savings income? Yes.
Yes, sir.
Next, let's move on to savings income. Always remember the rate bands also will be first utilized for non-savings income, then savings income, then dividend income. And it does not mean for savings income, because savings income it's with 7850, so it will not be of basic rate of 0 to 37,700. Okay.
Okay, sir.
If the rate band, if we have moved to 45% for non-savings income, then savings income will continue from that, but it will not start off from the beginning.
Okay, sir.
Clear? Which is exactly why I wanted to solve this question. Okay.
Okay, sir.
So now savings income, he's a higher rate. We have established that he's an additional rate taxpayer, correct?
Yes, sir.
Because he's paying tax at 45% already.
Yes, sir.
Now, can you tell me, do we have any nil rate band?
No.
We do not have any nil rate band. So savings income of 7850 would be taxed at what percentage?
45.
45%. Absolutely right. Similar to personal allowance, once the rate bands are being utilized by non-savings income, then the savings income and dividend income follow beyond behind that. Okay.
Yes, sir.
Equal to 7850 into 45%. Can get 3532. So total tax liability would now be is equal to sum of all of these, making it a total of 54,986 pounds. Clear?
Yes, sir.
We take an illustration at this 54,986. Did you understand how we did that?
Yes, sir.
Any doubts on this so far?
No, sir.
Okay, if you have any doubts, you can always reach out to me and I'll be happy to help. Okay.
Okay, sir.
I think with this, we'll conclude our session. Tomorrow, let's start off with discussion on dividend income. Okay.
Okay, sir. Thank
Tomorrow
you.
we'll discuss dividend income and reliefs, personal pension contributions, gifted donations, and all of those areas. All right.
Okay, sir. Thank you.
Okay. If you have any doubts, always feel free to reach out and I'll be happy to help. Okay.
Okay, sir. Thank you.
Bye, Mohit. Have a great day. All the very best.